Good morning, everyone. This is Brad Matheny. Today's the 6th of January. This is a quick little update to my $1,000 challenge. If you've been following along, this is my website, mint.com. Right now, I'm offering a Christmas deal, extending it for at least another week or so. I'm getting a lot of people that are taking advantage of this before it goes away. It's a great deal if you're interested in learning how to become a better trader and learn some proven techniques. But the other thing is this $1,000 expert growth challenge. I started this because last year, a lot of people started asking me, how to trade and how to get things set up. And I came over here and created well, let me go open it real quick. There it is. The paper trading plan. Start with $1,000. Break the capital into 1/3 limits, no more than $333 per day per slot. And I've tried to keep that limit, $333 limit, in place. So I will try not to trade more than $200-300 a day on average. Trade no more than 2 to 4 times a day, which I've traded sometimes more than that. Try to keep my targets at one or two short-term trades and 1 or 2 intermediate-term trades. Attempt to keep my losses limited depending on market volatility. Of course, we've had a lot of volatility. And if I lose more than $300, and this is on a closing price peak equity basis, then I will stop and reevaluate what I'm doing, closing out all of my positions and try to reevaluate. So we just got through the first 20-day period. And what I want to do is come over here and show you what we're trying to do, what I'm trying to do. So I'm trying to show traders how to trade fairly aggressively, not overly aggressively, but targeting, easy options targets of, 20, 30, 40% options targets in a short period of time, typically within a day or two, maybe even a 10, 15, 20, 30 minutes. But the idea is every 20 days, which is roughly 3 weeks, I should correct that. If we can get to 40% profit every 20 days, we will turn a $1,000 account, or I will, into a $155,000 account. And if I can do 50%, I will turn a $1,000 account into a close to $300,000 account. At least, hopefully, over $80,000-90,000 minimum over the course of the first year, the first 12 months. This is basically a full year. 260, 280 days of trading is a full year of trading. So again, I may not get 40 or 50% on average, but if I can maintain this level, by the time we get to the end of the year, I should be, 5,600% higher, or 100 and, basically, I don't know how to do the math there, but that would be it would be huge. It would be 129,000% basically. So 1,290, 12,900% profit from this $1,000 start. So let's take a look at where we're at. So at the end of the first 20 day, I started with 1,000. I'm up to $1,506 as of the beginning of trading today on Monday. I had open market positions of $188,000 or $188, and I was off by about 116%. So I do have, if you figure that plus that, I do have about $300 in total capital deployed right now, when you figure how much I'm off and how much my market value is. I also had, as of this morning, these positions. SDS put, January 17th, $19. SDS put, January 17th, $18. XLB call, $89, January 17th. XLB call, $88, January 17th. SILJ, $11 call, January 17th. And XLRE, $42 call, January 17th. So I had 2 weeks to go on all of these, and my plan was to book what I can today. But again, I've already gotten out of these SDS puts, and I've gotten out of these SILJ. The rest are still pretty much sitting there. The point again is that, by targeting and aggressively trying to trade, let me move this up a little, by aggressively trying to trade options in a way that is, efficient, meaning that I'm trying to manage and book profits. Like this 87% profit, I held on to it through the morning a bit. I still got out at a decent profit level, but some of the others I got out were, 100% profit, 60% profit, but they're small, so you turn, here's a $10 profit, 25% on a $40 trade. If this doubles up to an $80 level, giving me 100%, or even get up to 60, 70 bucks, I'd be pulling this out. $40 into 70, you do that 3 or 4 times a day, 30 bucks, you make 100 bucks on a $300 trade, that's 33%. And then you can leave, like I'm leaving a lot of these runners right now. If we take a look at, the opportunity here, it comes down to, are we able to maintain this 40 to 50% every 20 days? I just completed the first 20 days. I hit 50%, which, remember, on a $300 maximum trade is basically about if I do the math in my head, about 140, 142% profit. I think it's maybe more than that, 168. And do the math here, calc. So 1506 divided by 1,000, 150%. But if I take the fact that I made 506 divide by 300, which is about what I'm at, 168% profit. So I made 168% profit on my trading capital, $300, in the first 20 days. Okay, not bad, not horrible. I did deviate from my plan a little bit, and the reason I deviated from my plan is that when I went back over here and got into these XLB options on the 17th, I didn't realize they were the 17th when I was pushing buttons, but that gave me a long-term swing. I also had a couple others in place. So then at that point, I started looking around at that 17th option and picking up some of these, low price options. $15 SILJ options. This is 3, and it's off $6, so 45 bucks. $15 options on XLRE. Here's 7 of these at 70 bucks. This is SDS. These were $10 options. And these were 2. It's up $10, 40. These were $20 options. So, again, you got to understand that, if you want big money and you only have $1,000 to start with and you're trying to protect your capital, and why am I trading like this, where I'm only trading $300 of a $1,000 account? It's because I'm trying to show people that you can be aggressive with a small amount of money, leaving a huge amount as cash reserve, and still do very well. I mean, could you imagine taking a $1,000 account, turning it into $70, $80, $100,000 after a year? That would be incredible, right? I mean, that's everybody's dream, because then you could take that $100,000 and turn it into maybe $800,000 the next year. And if you can do that every year, man, you're set. You don't need to worry about it. You can just live off of what you can trade. You follow me? So I hit the 50% level on the first 20 days. I'm publishing all the trades, in my Discord channel, so you can see what I'm doing. It's not that hard. What you have to remember is that when these trades come back over here, when they get up in the 25, 30% level, grab them, book them, take them. Leave one on as a trailer if you want, but don't let it get back below that 20, 25 level. You really, if you want to succeed in trading, in fact, I showed this to, and I don't know if I can show everyone here. Let me come over here and open the dice trading game. Now, you're not going to be able to see all of this, but this is available to my subscribers. It basically shows them how opportunity works as a trader. So you have these parameters over here you can set. Starting account balance, amount to bet, win-loss ratio. These are assumed trading ratios, okay? You have this scenario here with the trade multipliers all defaulted to 1, the win rate table all defaulted to 1, and then you have this money management system, which basically says, hey, if we start doing well, up 25 or 5%, we'll start increasing the amount that we trade based on our reserve capital. Remember, we're only trading 1. So if I come in here and set this to 1,000, and now I come in here and set the win-loss ratio as 3 to 1, you will see that, you know, the performance, and again, this is randomized, the performance is pretty solid. Here's at 56%, and let me scroll this down just a bit. You can see the chart, and I'm going to show you how this works out at a 3 to 1 risk-reward ratio, which again is, if you can target that 30%, like I showed you on the options, 25, 30%, you're right in there. You're going to hit that 3 to 1 risk-reward ratio as long as your losers aren't very bad. Now, if you can get more than that, like I did, 50%, after a 20-day period, you're hitting, you know, you're basically hitting probably a 4.2 to 1 profit loss ratio, just because you're grabbing profits quicker than you're losing money. And that's how the system's designed to work. But if I keep hitting reset, you'll see that when we're in the 50s on the win-loss ratio, you're going to do well. When we get 40s, you're still going to do well on a 3 to 1 risk-reward ratio. 30s, you're going to come in and you're probably going to waffle around unless you use some good trading solution. So this is 32%. This is without trade management. You still made a little money, but you're getting into that weaker performance area. So again, what you're looking at is if you get, now see 56, you're making a lot of money. And that's what you got to remember. It all comes down to, if I drag this over, it all comes down to your success in trading and your win-loss ratio. If you can win 60% of the time, 50, 60% of the time, which means grabbing profits, turning them into winners, and you can operate on a 2.5 to 1 win-loss ratio, then as long as you can maintain that 40, 50% level, I'll come back over here and try to show you, 32%, you make a little money, okay? 64%, you do really well. You make some money, and that's what I'm trying to tell you. Grabbing those quick winners is so important. I mean, it's the difference between sitting at a blackjack table and waiting for 10 blackjacks in a row, or realizing that you're up 30, 40, 50, 60% on your money and taking it, getting up, walking away, finding another table, and trying to do the same thing. Now, I know gamblers, you know, they sit there and they try to turn a couple $100 into a couple $1,000, which you can do, okay, by playing consistently and knowing what to do. But in trading, you know, you're not going to get those big payouts. They're going to come in nickels and dimes. You're not going to get into an options trade like we had over here, and you're not going to see 9,000% in 2 days on a profit. 87% is huge. Book it. 25, 30% is great. Book it. You see these longer term ones, yeah, I've taken some big drawdowns holding these positions. I'm really not too worried about it because I'm growing my account every day by booking new trades, which are offsetting these losses. And like I said, these are playing into, if you follow my research, we're moving into this big rally phase right here. Today, we're trading in the inside breakaway. We're holding up. It looked really good this morning. Now I'm just kind of waiting through this rally phase, waiting through this rally phase, because we're going to get, I think, a pretty good rally into the inauguration. And I think that these options are going to play out just fine. I really do think that these SDS options, XLB and XLRE, are going to play out just fine. And if not, if we come up and I get out at a minus 13%, okay, I'll handle that, because every day I'm grabbing some new trades and grabbing some new options. In fact, let me check real quick over here on my phone. Back over here. Nothing's really changed, so I'm letting it go. And see here, hold on, I got a message. My son's getting off a little later than expected. So the point behind this is I want you to, consider, if you're struggling with trading, if you're having some trouble, please come to mint.com and check out this $99, $100 offer, the Christmas deal, before it goes away. You get all my trading tools, my gunslinger tools, you get my research, you get my videos, and you get 6 months worth of my guidance and algos, research, resources, videos, and everything. It's a really great deal. And like I said, every day I'm going out and I'm trying to show you guys how to make money trading options. In fact, we just did a live Discord event yesterday, and, a lot of people showed up, a lot of people had questions. But, when I sat down and did the math, I was kind of surprised that just quickly in and out, even with, like I said, even with these losses that look kind of big, I was still able to knock out a $500 profit. It's right here. There's the profit. And that still ended up, you see the account, rolled into a little loss when I got started, rallied up, and then this is when I got into those long-term trades right here. Since then, I've been rolling around a little sideways. Of course, the markets have, when we come over here and we come over here to take a look at the SPY, here's the SPY breaking up today, rolling down a little bit. But, look at these moves, and this is actually what trapped me. So let me show you here. So I got into those initial long trades on the January 17 options in this area. Okay, my analysis still said, just like I showed you here, that we're moving into a rally phase, and we had run into this base bottom right here, and I thought, okay, we're going to roll right around the 588, 586 area, and then boom, we broke down into this 584 area, pretty quickly. And that was really on that, Friday to Monday. And we broke down, and finally saw some relief on Friday. Big relief showing up today. And I really think if you were to take a look at this, I'll draw it for you. The inauguration is around the 20th, 21st. I think we're going to be rolling into a fairly solid rally, potentially up into the 613, 614 area on the SPY, and the QQQ pushing a bit higher. We could very easily see a solid 50-60% move from roughly here to this rejection. That puts us into 60%, 100. So we would be looking at a move right up into potentially this area again, or this area again, possibly up to this area, 124. And that's what I'm playing right now. I'm playing this reversion rally back up to new highs around the inauguration. And then I believe we're going to move into kind of a double topping formation and then roll back down a bit. So I'm just playing the next 2 weeks, looking for a rally right up here into this 17th time frame, which is right before the inauguration. And in the meantime, I'm playing very short-term options, trying to grab whatever I can. So This is your update. Like I said, as of right now, end of the first 20 days, I've been able to do on $1,000 account. I've turned it into a $1,500 account. Currently, it's a little off. It's 1480 something. Let me check. Come back over here. 1495.08. And not the end of the world. I'm off $10 so far with the markets rolling around. And like I said, I pulled some profits today. And we're just waiting on to see what happens with the market. I've kind of taken a couple of other swing trades here, just waiting to see what the market does. And it's really going to come down to, do we get this big rally phase? Okay. And let me see if I have, see, there's the gunslinger tools that I offer to subscribers. So you can see we've rolled from this big bullish phase here, bullish, 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 into a short-term little bearish mode here, back into bullish, love it. We moved back down into this area. This is what's called flash trending. Need to be very aware of flash trending. It's very clear when the red-green line is below the purple-blue line that you see here, you're getting into flash trending, which is normally very short-lived and rolls back to the upside. When the blue line is above the red-green line, like we have right through here, that is normally what is called organic trending or momentum trending. So as we move down into here, you can see flash trending. Then we moved into organic trending through here and weakened right through here. Then we moved into a little bit more organic trending here, and then we moved into flash trending here. So right over here, we were getting in that end of trend mode. That's the way I look at flash trending, like right here. End of trend, flash trending, right there. Causes the markets to basically potentially change direction. Flash trending, end of trend, flash trending right here. Okay, and then lastly, we have these cycle patterns. So these are the high-low cycles. Basically, you watch for price to roll through these deep low into high cycles. We're currently in an upward swinging high cycle. High cycles look a lot like this, where they get very high and kind of flatten out up here. So that's where you get into these high cycles. The whole idea here is take profits up in these high cycles. Let it run for a bit, but start booking profits. So right now we have these two green triggers right here and right here. These are indications of an upward trend. I'm looking for the markets to continue to move higher, possibly into the 613, 614 area. And my momentum and trend signals look pretty good. Green here, moving higher here with a green trigger, about to turn green. Remember, this is daily, but these work on any interval. I come back down here to hourly. You'll see we're already, get rid of some of these lines for you. We're already, I'll start over. We're in a green mode here. We've gone green, we're bullish. We've gone green, we're bullish. We're in an organic trend here. Like to see that. We've rolled deeply out of a low cycle and then up through a couple of little rotations into a high cycle. This high cycle may continue up throughout the rest of the day, may roll down a little bit. But like I said, my upper target is that 613 area on the SPY, and I believe we're going to make a very solid rally up into that 613 area, maybe a little higher. And again, these work on any time cycle. So if I want to come over here, and these are called the gunslinger tools, there's more of them. Come down here to 5 minute. You can see we're still in bullish trending, green, getting through another low cycle. So you can see here, high cycle, low cycle, high cycle, low cycle, high cycle, low cycle, high cycle, low cycle. Moving, gonna move into an upward cycle here. So we're still bullish over here. This is the Donchian based pressure system. This is the pressure system. We're in moderate weakness. We were in flash trending here. We're now in mild organic trending right over here. I'm looking for this to roll back to the upside here. and potentially move back into trending so that we can see where we're at. This is, I will show you the newest indicator, which is called the top and bottom indicator. Let me go back to the SPY. This will be released to members in about 3 days. And now what we're looking at here, guys, is here's our trending. Here's our exhaustion points, E4, E8. We've rolled down into lower trending, as you can see here. We are now in consolidation. This is the ADX. This is explosive trending when it's above the envelope. This is consolidation when it's below the envelope. We're rolling back to the upside, which means we're going to see potentially an explosive move, I hope, to the upside. And the CCI indicator is rolling down off this deep low, looking for a base bottom, possibly going to be moving higher. So like I said, because, and let me add the cycle system here. So cycles. So you see how we're in this deep low on the cycles here, starting to hook back up. This is what, keep active, that's my other server. This is what I look for when I'm trying to determine buy and sell signals. So I want to try to find buy and sell signals off of these deep lows. I'm looking for buys off of these deep lows. So this is a very deep low, okay? And until I get that confirmation with the pressure system moving higher, the ADX moving higher, and possibly some sort of an exhaustion system, you know, this is, to me, a pullback rolling upward. And like I said, I always start from the top down. Top for me is weekly or monthly. So I'll come over here and I'll look at weekly or monthly. You can see we've hit an exhaustion level 13 over here. We've moved down through weakening trending, starting to get into some explosive movement here. We are in organic pullback trending. We're still above zero. That's the threshold. Because we're red here, we're getting pullback trending in an organic mode, looking for kind of a bottom setup. We are now rolling through this fairly deep low cycle phase, probably going to roll back to the upside. And like I said, CCI is staying above 100, which indicates that we're in bullish trending as well. So this is basically on the SPY weekly. This is just a little pullback right here. Okay, come back over here to daily. Now we get into even more detail. So here's our deep pullback low right here, moving back to the upside. Perfect. That's what I want to try to be long. I want to see this moving up to the upside right here. Change these colors to green so you can see it. Now, here's the CCI rolling downward. Now it's out of this deep below negative 100 level, rolling upward. Good. I want to see that happen. Here we have our flash trending lows again. Perfect. I want to see flash trending rolling upward. That's what's going to happen when we get a reversal. So I'm expecting this to try to push higher over the next 5, 6, 7 days. And you can see here on the ADX, we've gotten into trending, stalled, into trending, stalled, and I'll bet you we're going to roll right back up here into trending again. So what we're looking at here, guys, is a pretty solid base level off of this low, and it looks again like we're going to see that 613, 614, 615 area become the new target. So that gives me a good little chance here that I'm going to get a roll up. Maybe I got to squeeze the chart down here. Hold on. About 2.5, 2 1/3, maybe 3% to the upside. I'm not going to complain about that. 2.5 to 3% or more to the upside on a nice little consistent rally over the next 5, 6, 7 trading days. I'll take it. No problem. And again, notice how the E4 exhaustion played out here beautifully. E4 is the early stage exhaustion. So, if you understand price movement, you typically get rolling every 6 to 9 days. I mean, really, it's kind of a 5 to 9 day time frame, but it can extend a bit. So these E4 patterns, like when you got this pattern here, this was a beautiful early stage exhaustion. We just needed to see a breakdown. So we needed to see it roll into a breakdown. We needed to see it roll into a breakdown. This is a beautiful early end stage exhaustion. Same thing here, end stage exhaustion. We need to see it roll into weakness. Where did we roll into weakness? Well, we started rolling right over here into weakness, into a downtrend. We started rolling here on the CCI into a downtrend. We started rolling right here into a downtrend as the cycles broke down. And look at how cleanly that lined up, okay? I mean, I'm going to go further to the right, make sure that I get a good trigger. Let's call it right there. That's, 1, 2, 3, 4 days before the actual breakdown in the market took place. We had a nice solid roll. We had a nice solid breakdown. We had a breakdown here, and we had the exhaustion pattern, and we started to take out this low. Really got into rolling. And now look at where we're at. So how did we know that we were moving into an uptrend? Well, we kind of had an early warning signal right here as we were rolling to the upside. But now we're getting additional confirmation right back over here as we start to accelerate back to the upside. So this E4 pattern here gives us a pretty solid indication that that's exhaustion, and as long as we stay away from that low and we start to get hooks back up to the upside, we should move into an acceleration kind of a phase. So again, looking pretty good here. I'm going to let you know how I do. I got another 20 days to try to get another 40-50% number under my belt. A lot of it's going to depend on whether we see this continue to swing higher. But cyclically, we're moving into the end of where's that? That's here. We're moving into the beginning of, 2025, which means a lot of money is coming back into the market. A lot of foreign capitals looking for safety and security. And we're really looking for a good, solid kind of an early rally phase into the inauguration. I think it's pretty much cooked into the books right now that you're going to see a lot of money roll in, a lot of safety and security, and just a little hint, I think you're also going to see gold and silver really make a good move, okay? So let's see how it plays out. All right, guys, that's it for now. I'll talk to you later.